Good morning and welcome to the next episode of the Land Hunter Podcast. I'm your host, Paul Morrison, land specialist with Mossy Oak Properties. And today we're going to get into land financing. Is it really as difficult as everyone makes it seem? We always hear about extra high interest rates, excessive down payments, terrible terms. Can I qualify? Well, I've got a great guest today, Mr. Cody Eaton. He's got 12 years experience in land loans with Farm Credit Mid-America and Rural First. If you get anything out of this episode, please like and subscribe. It'll greatly help out our channel. And hey, let's jump into the episode.
Welcome to the Land Hunter Podcast, where we discuss all things land. Introducing your host, Paul Morrison.
So I know a lot of people have heard of and are familiar with Farm Credit. It's a pretty common company around the country and in a lot of areas. Y'all kind of formed off of Farm Credit and y'all specialized as a division and company off of Farm Credit. And just kind of give us an idea of where that came from and what y'all are all about.
Yeah. So to break it down from the top, so the Farm Credit system is a nationwide system. So there's actually Farm Credits lending in all 50 states. Of that system, it is broken up into individual associations. So there's roughly, I don't know the exact number, there's about 60, I think it's like 64, 65 farm credit associations that cover the entire United States. Some of those are really big that cover multiple states like we do. And then there's some that are a lot smaller that may only cover 10 or 12 counties in a state. That's how this system as a whole works. So I work for Farm Credit Mid-America. We cover Tennessee, Kentucky, Indiana, Ohio, a few counties in Northeast Arkansas, and a few counties in Southeast Missouri.
Okay.
So where the Rural First brand comes into play is back about 2018. There's a lot of lending regulations that came into play, and a lot of that was a result of 2008, 2009 mortgage meltdown.
Right.
Dodd-Frank Act came into play. A lot of regulations came along, and a lot of the farm credit associations out there. Of course, a lot of those regulations are more specifically pointed at residential loans, construction loans, and home loans. So we had a lot of farm credit associations out there that just didn't want to have to deal with the regulation side of the business. So they they had made the choice, we're just not going to do home loans and we're not going to do construction loans. Well, it was a very large part of our business here at Farm Credit Mid-America. So we put the people, the processes, the regulations in place to where we could be compliant and do that kind of lending. So what we had a lot of associations that were reaching out to us and saying, hey, you've done the necessary steps. We would like to be able to offer these, construction loans and home loans to our customers. Can we partner with you and do our lending together? And we said, yeah, absolutely. So we had to create a brand to do that. And that's where Rural First came from. So, because we couldn't really go to a farm credit with another farm credit, and so we had to come up with this brand. So now, even though we're only 4 states and a few counties in those other states, we're actually doing lending in about 20 states now.
Oh, nice.
So we've partnered with all of these other farm credits across the country and working with them to help their customers build homes and buy homes in their areas too.
Gotcha.
So that's the background with the Rural First. But, a lot of us have grown up in rural areas. A lot of our loan officers have grown up on farms. They still have farms. Right. It's a big part of our lifestyle. I can remember when I got out of college and was looking for a career, I came across Farm Credit and it just blew my mind because I was like, this is exactly where I need to be. I've got a degree in finance and I love the outdoors. Right. Why in the world would I want to go anywhere else? So, it's exciting for me when people call and they're buying a piece of property. I get excited for them. Yeah. I'm just as excited as they are because I want to know, what they're going to do with it. And, I love it when they come back and share pictures of deer they kill, turkeys they kill, tell stories. I've had people, write letters and everything. And it's just really awesome. We get excited about it. We're passionate about it. All of our loan officers are that way.
I could see how rewarding it would be to have somebody achieve, especially it's easy for me because they've usually cleared the financial hurdle.
Yeah.
which is what can hold people back sometimes. But once they've cleared that financial hurdle and they're cleared to qualified to go buy a piece of property, I get to have fun with them, right? It's like, we're kind of just shopping at that point and trying to get the best deal we can. You kind of get them through what I would call the nuts and bolts of everything. And a lot of people get pre-qualified, which is seems like a pretty quick process. And maybe go into the difference and the advantages maybe of pre-qualification versus a pre-approval, and how that would maybe help somebody really even narrow that focus down on, we'll put just the dollar figure that they're able to spend and afford on a piece of property.
Yeah, absolutely. Yeah. And like Paul said earlier, there's a lot of misconceptions out there. If you go and just kind of start doing a Google search or something about getting land loans, it'll kind of scare you a little bit, because you see a lot of really high payments. You see a lot of stuff about short-term, arms or balloons or things of that nature. And some of those things are out there and they have their place. But I have a lot of people that will call me, they're buying their first piece of property and they just don't know. And they come out and they say that, like, I don't even know what questions to ask. Right. Here's ultimately what I'm trying to do, but I don't even know where to start. And I say, you know what? You've told me all I need to know. So, for me, it's just kind of, having those people tell me their story. Well, tell me what got you here. Right. Just kind of give me an overview. What are you looking to do? What your goals are. And then I go through that with them. And that big piece of it is that pre-qualification. So the biggest difference is a lot of folks think that they can just call the mortgage person that they used on the last house they bought. Right. And they'll tell me that, say, I called, so-and-so, and they didn't even know what I was talking about. Right. Like land, like, no, that's not us. They do home loans. And so that's probably the biggest thing, is that when it comes to doing land loans, you just can't call any lending institution. So there's some banks out there that do it. And then, there's us. By far one of the biggest things that we do is land financing. So talking what the terms are for a land loan, what interest rates look like, what their options are. And many times when I get done having that conversation with people, a very common reaction is, "Oh, that's not as bad as I thought it was going to be."
Big weight off the chest.
I didn't realize that down payments were lower than I was thinking. Right. Interest rates were better than I was thinking. Fully fixed rates are available, and so it takes a lot of weight off doing that. And then a lot of that goes back to our expertise and our passion that we have for what we do. As a pre-qualification goes, they're super easy. A little bit of information over the phone. We do it without a hard credit pull, which I think is big. Yeah. But go through that process, and I can tell them and say, hey, here's if you don't have a specific property picked out, here's what I think your budget should look like. Right. Here's what I think you can afford, and everything. So and again, when I do a pre-qual, I have a really good idea if I'm going to be able to help that customer. Right. My main objective isn't just to be able to hand them a letter. My main objective is to make sure that I understand their financial situation and that I can actually help these folks. I can make a loan for them. Right. Because that's what's important to me. I'm sure they don't want their time wasted or anything like that. So when I send a pre-qual to somebody, I feel very confident. And if I don't, sometimes I may recommend that we go to that next step, which would be to do a pre-approval for the loan.
What you're really trying to do is not only provide assistance for that person to realize probably one of their big dreams and goals in life, but also to protect them and give them at least some guidelines and boundaries so they don't overextend themselves and ends up being a mistake in the near future. Yeah. Because that land's always going to appreciate, but you still got to be able to cover the note until it's paid off. And so what are some common mistakes you kind of see people do, maybe from getting pre-qualified? And so we're out looking at farms, and say it's taking us a month or two to get a property, and maybe between then and when they maybe put one under contract, and then let's say we get into the pre-approval, are there some common mistakes people make there, or some things you would advise them to avoid doing during that process to kind of keep things equal from when the pre-qual and the pre-approval kind of go through?
Yeah, fortunately, I always try to make it a point to where if I see, when I run that pre-qual, if I see that maybe there's something that's kind of tight, maybe it's cash in the bank, or maybe they're kind of tight on debt to income ratios or something like that, I'll make sure to have that conversation right there. Say, hey, here's where we're tight. Here's what you want to make sure that you don't do. But the common things are, don't go out and get a loan right in the middle of getting a mortgage. Don't go buy a car. Don't go finance anything. Yeah, and that really goes back to the importance of that pre-qualification, because there's times where I'll run a pre-qual for somebody and they're just not in position yet to be able to do what they're wanting to do. But that gives me the opportunity to say, look, you're not there yet, but here's some things that you can do. And a lot of times what that's going to be is freeing up DTI. Because one of the things is we're going to take a little bit more of a conservative approach than like a typical mortgage banker out there will.
Sure.
You go to buy a house, I have people tell me all the time, I got pre-approved for a house for X amount of dollars, and you're telling me I can only borrow half of that for land. But yeah, that's exactly what I'm saying. There's a big difference. Land loans, not everybody does them for a reason, because there's more risk in them.
Yeah.
I make use the example all the time when I'm talking to people. I'm like, look, if you have 2 mortgage payments, you have a mortgage payment on your home, you have a mortgage payment on your land. Times get tough. You can only make one of those payments. Which one are you going to make? Sure. You're going to make the mortgage payment on your house. Right. So, not fortunately, we don't run into that a lot, but it kind of explains the increased risk with that, which is the reason that, there's down payments associated with them. Typically, although we can go out and do longer term financing, most of the land loans we do are probably in the 15 to 20 year range. Okay. It allows me to have the conversations with people around the debt to income ratios. Hey, you may need to pay these things off. There's a lot of people that don't buy land because of the truck payment. I run into it all the time, and I'm like, you're driving your land payment. Literally, the loan you're wanting to qualify, the payment is less than that $1,500 truck payment.
So we've been talking about land, and that can be a pretty broad term, right? So maybe let's kind of define land loan. What do you qualify as for a typical land loan? I know things can vary, but
sure. Yeah. So the biggest thing for us is being part of the farm credit system. We have certain eligibility requirements that properties have to meet for us to be able to finance them. The biggest one is right there in our name is rural. It's got to be rural, outside city limits. So we just don't do much inside city limits. There's some situations where we can, but for the most part, somebody's calling me wanting to buy a piece of property. That's the first thing I tell them. If they don't have something identified, is that it's just got to be outside city limits, which is, we don't run into that a whole lot because there's just not that much land inside city limits these days. Every now and then I'll get a call. Somebody's looking at like a lot in a neighborhood or something like that. But for the most part, just that rural piece of it is the most important part. When we get into some higher price properties, say when we get north of 500,000, some things like that, our next level of eligibility is needing to be able to call that property a farm. Okay. Our definition of a farm is 5 cleared acres of pasture, or if it's an all wooded property, 15 acres or more. Okay. Yeah. So again, that's generally when we're getting up into the higher price stuff. And then, we kind of have some steps above that when we get up into some $1 million plus multi-million-dollar properties. Generally, we're going to want to see a little bit more acreage with those as well. It may go to 15 open acres or 35 acres of woods or something along those lines. So again, that's just a farm credit thing. Some other lenders that, some banks and stuff, like they may not have those or would not have those requirements, but that is for us. And again, that goes back to our roots. We were put in place over 100 years ago to serve rural communities and agriculture. Right. It's what we do. That's why we have those eligibility requirements. So a lot of time, if they're buying just a conventional home on just a few acres, they may be better off just going through a traditional mortgage lender. They may get a slightly better rate, a little bit more flexibility on terms, programs, things of that nature. So I have a lot of people, because we're not a secondary market lender. We don't sell our loans. We keep everything in house. We just have our own loan programs that we do.
That's something I was going to bring up is you don't sell your loans off, and so you're always dealing with Rule First.
Correct. We have a down payment requirement. We pretty much have a 15% down payment requirement across the board. So most of the home purchases that I do, actually a fair amount of them actually come from other lenders, mortgage people, because it may be a unique property. It may be a working farm, too many acreage, multiple dwellings, a certain type of dwelling like a barn dominium or some sort of maybe unconventional type of home on the property that doesn't fit their programs, but it's a good fit for us because we have some more flexibility when it comes to those types of things. And I think we have, one of the best construction loan products out there, as far as, it's fully fixed rate from the very beginning, one-time close. We have that flexibility that we're doing a ton of barn dominiums these days. A lot of barn dominiums are just super popular. They've got one of the big things with barn dominiums is, for the most part, a lot of people are what we call self-contracting those. They may go through Summertown Metals or a building company to build the shell, but then they essentially handle the build out themselves. They may subcontract it out, do some of the work themselves. So we're okay with that. We do a lot of those. But yeah, it's gotten really, just construction loans, the building here in Middle Tennessee, and really across the country. A lot of people hear about the housing shortage these days. So a lot of people just make the choice. They go out and they look, they just can't find a home that meets, what they're looking for. So they make the choice, let's buy land and let's build what we want.
Yeah.
And so it's been huge for us. And again, that when it gets into, construction lending, you want to be working with a lender who, has that expertise, can walk you through that process, fully explain everything. Because there's a lot of moving parts, and it doesn't end when we close on the loan. It's just starting.
Yeah.
When you start building,
funds haven't been dispersed.
Yeah.
For the build aspect.
Yep. All that process. So yeah, it takes 8, 10, 12 months to build a house these days. So, I'm still working with those customers throughout that process. Right. Questions come up, changes need to be made. Certain things happen. So we stay involved with those until.
What I'm trying to get at, I think in the end is you've gotten through and you've bought the property. You've also got a construction loan. You're not paying really on that full loan until the money's dispersed, right? So there's a timing aspect of this that builds the amount owed as you build. So maybe walk through that because you're going to be a lot more well-versed in it than me. But
yeah. As far as the construction loan itself goes, the very first year of that loan, which is typically your construction period when funds are being dispersed, that loan is going to act a lot like a kind of a line of credit. Whereas you're going to make an interest-only payment every month, and you're only going to pay interest on what you've used.
Gotcha.
So for anybody that's had like a HELOC or something like that, when that loan's sitting there and you haven't pulled any money off of it, you're not being charged for anything. Right. You take a certain amount of money off of that loan. Now you start accruing interest on that money, and for every month you can be billed for whatever interest is due. So that's the way that construction loan is going to work for the first year. Now we're still again working off of a fully fixed interest rate from the very beginning.
Right.
But it's going to be interest only, and then after that first year, that's when they're going to start making that regular principal and interest payment to pay the loan off, hopefully the remainder of the time.
Kind of talk about what you see as far as interest rates and where they're, I know you can't predict the future, but where the trends you've seen maybe over the last year and where those may be pointed in the future.
Yeah, absolutely. Well, like everybody I'm sure is aware of, we saw a big run up in rates. It was due to a lot of different factors, but mainly inflation. So it pushed them up quite a bit, and they've pulled back from that number some. But they're still, historically speaking, well, I guess depending on how historical you want to go, look, the last 10 years, they're a lot higher than they have been.
Right.
Now you go back 20, 30 years, that level of history, they're not as high as they used to be.
We're below average.
Yeah, absolutely. So it was a shock to a lot of people. We went from doing 2% and 3% rates, to 7%.
Right.
And even some stuff hit 8%. So, and that's, you might as well say that was over like an 18 to a 24 month time frame. So it was shocking to a lot of people. And that level of increase definitely has an impact on people's borrowing capacity. You take a $300,000, $400,000, $500,000 loan at a 3% rate and look at it on a 7% rate, it's a big difference. Between, the payment, the interest portion of that payment. So it definitely has an impact on things. But this year so far, rates have been fairly stable. We may see some fluctuations. We've seen some fluctuation, maybe in a 0.25% range, something like that. But overall speaking, that's not a lot. But the biggest thing is just, people watch the news and, the news will come out and say, whatever. Or even the Fed, the Fed comes out and they may say, hey, here's what we're thinking that we want to do.
Right. Here's our plan.
But that's on that day. And there's so many different things that happen from one day to the next that can change that course. And we've seen that. They've changed. They've gone from saying we anticipate this many rate cuts, and they actually did a few of them. But to where now they're, kind of taking the stance, we're gonna kind of hold for now, because there's just so many different things out there in the economy that impact rates, and there's so many of those things that nobody has any control over. Yeah, their bond markets, their inflation, their whatever it may be. The topic now is kind of what impacts the tariff, are any of these tariffs, things like that, going to have. So when people ask me what I think rates are going to do, most of the time it's, I really don't know. I can kind of give you an idea based on what they've done here in the last few months, but where they go from here, I really don't know.
Yeah, it's a very short-term prediction. Mm-hmm. I mean, you know what I mean? If you could look out and say in 6 to 8 months, rates are going to be X, well, you wouldn't be sitting.
You wouldn't be talking there. I wouldn't be sitting right here. Yeah, exactly. Yeah. So, so the conversation that I have with a lot of people, I've had a lot of people that will say, well, I'm just going to wait. These rates are just too high. They can afford the payment. They just don't want it. More power to them. That's perfectly fine. But I think what a lot of those people are going to experience and have experienced is that prices are not going to stop.
So when I brought up rates, there's two places I was kind of steering this conversation, and this is one big one. Mm-hmm. So kind of speak to that of not the danger, but maybe the lost opportunity if you do sit here and wait and wait mm-hmm. and wait. And like you said, we don't know that a drop's coming.
Right. Yeah. Yeah. I mean, it's like you said, just nobody knows. There's just not any way of predicting that. And I have a lot of, people will say, well, do you think rates are going to go back to, 2, 3, 4% that we saw? And my question to them is, do you want to go through what we had to go through to get low rates like that? Because I sure don't. No. We had to go through a global pandemic. We couldn't buy anything. We had to get in line to go inside of a grocery store. There's a lot of things that we've kind of glazed over and we don't really remember about that time. But that was some wild times that we went through as a country. So I don't really want to go through that. Now, granted, I know everybody wants the lowest rate they can get, but yeah, in my experience, I've had people that will say, I'm going to wait a few more months because they watch the news and they think the rates are going to drop. But they're dead set on, I'm going to buy something, but I'm just going to give it maybe a month or two here and just see what happens. And in a lot of those cases, interest rates actually went up some. They called back and said, what's the rate today? And I said, well, it's quarter percent higher than what it was 2 months ago. And they're like, man, and they end up doing it, go ahead and buying something and got a higher rate on it. So, again, everybody's different. And I'm bad about paralysis by analysis, or, I say, if you're the kind of person that you're constantly looking for a reason not to do something, you're always going to find that reason. Absolutely. And I'm that person. Like I'm preaching to the choir here. So, but yeah, the good thing about interest rates is that if you do get into something at a higher rate, at some point, when rates do drop, you can always, refinance, or, we have a little bit different approach that we take to that with our customers, but there's always the opportunity to take advantage of a drop in rates if the opportunity presents itself. So, because I just don't feel like, like you said, that rate that property values are going to go down. Now, granted, there's something major could happen, but if it does, that just is what it is. But
that would probably be the last of our worries.
Yeah, exactly,
right?
exactly.
Like
Yeah, but I think looking at the stock market is a great example of that. You take this week, or here in the last month, we've seen a lot of volatility. There's been some days where the market's dropped 1-2%. And those days we really focus on them and we think, oh man, it dropped, my accounts dropped or whatever it may be. But when you really zoom out and you look at that line, it just goes up. And you don't see those little bitty, I feel like the land market is exactly the same way. I've lived here in this county for 42 years. And I can remember, back in my younger days when acreage in Williamson County hit like $20,000, $30,000 an acre. It was just unbelievable.
Right.
Unbelievable.
Yeah.
And now you sit here and you think back, man, if I could I'd buy it all day long if I could find it at that. And so I can't ever think of a time where, I've looked back and thought, I shouldn't have done that. And I just feel like, the best indication of the future is looking, back at the history of things when it comes to stock market or land values in general. And, I just feel like there's a very high percentage or a high probability that trend's going to continue.
It's just kind of the mindset is really what the knowledge is part of it, but the mindset too is really, I think, the heart of the whole land specialist part of this, right?
Yeah. Well, you don't have to have a long conversation with somebody to figure out, one, are they passionate about what they're doing? And two, are they an expert in their field? Right. And that's one thing that I hope that I bring to the people that I interact with is that I love what I do. Right. But also, I want to break this down. I want to simplify this and uncomplicate this as much as I can. Right. And explain to you how I can help you do what you want to do in a clear and concise way that's not confusing you, leaving you walking away with questions still in your head. Because I've been in that situation before where I've been looking to do something, had a conversation with somebody, and when I get off the phone or leave, walk away from that, I know there's no way I'll ever go back to that to that person again. Because I didn't, one, I don't think they cared about me, and two, I don't think they really knew what they were talking about. Yeah. And so, but it's hard to, you have to be passionate about what you're doing. And so, that's, for me, I would never do anything other than what I'm doing as far as financing goes. I've had opportunities to go do and be just a residential lender. And I've told them, like, you don't want me to do that. I don't care anything about financing a house in a subdivision. I care less. And if I don't care about it, that's gonna, the people that I interact with are gonna pick up on that.
Sure.
And so I just don't want to have anything to do with it. So I'm truly lucky to have found the company that I get to work for every day. And to me, it doesn't feel like a job because, just like you, I wish I could be out more on properties. I go out when I can. I do have to sit behind a desk.
Maybe in the spring and
a lot of times.
Winter, summer, it's not fun.
But yeah, it's just, I love what I do just because everybody that I interact with, the customers that I get to work with, they just all have that similar interest. Yeah. We're more aligned, for what they're looking to do.
Talk about them to get a piece of land, invest in a piece of land, improve it and enjoy it and hunt it. And while you're doing all that, making those memories, you're also really increasing the value of your properties. Mm-hmm. You're making a sound financial investment while you're also enjoying and loving every minute of, like you said, with your family, with your friends, hunting it, doing whatever you want to do on it, fishing it, whatever your recreational passion is. It could be riding bikes, it could be riding side by sides, whatever it is. You're getting to do all that, and that's what this channel is that's what I built it on. I see a lot of channels, and I get a lot of information on land management, habitat management, food plot type stuff. Hunting obviously has its own little genre. My thing is you can you can crumble that together and have all that plus a really solid financial investment. And whether it's still like your family's property, whether that's left over from generation to generation to generation. I mean, who knows what your great grandfather bought that property for? Pennies on the dollar.
I think it's like $600. For 300 and something.
And worth a lot more than that. So whether you're leaving that as generational wealth or you're actively picking up another property or rolling it into another property and growing that one, and it's just a cool lifestyle type investment that I feel like I've been fortunate enough to benefit from, and I think a lot of other people who have that same mindset that we were talking about could also benefit from. And then, like you said, one day, if my kids or their kids decide that piece of land I leave is, it's up to them what they want to do at that point, there's a lot of values that go into that I hope my kids catch on to as they see me putting back into land. And even if you're not a hunter buying land, you don't have to hunt it. You can still, it's still you look at the biggest investors in the world, I guarantee land makes up a large portion of their portfolio. Because it's safe, it's stable, and now it's I think that curve of growth is getting steeper and steeper and steeper, where you're seeing a lot used to it was a long-term hold. And I think now, even if you're willing to hold for 5 years, you're actually seeing a really good ROI that may have taken a decade or 15 years, 20 years ago. So,
and I think the other thing is, it's perfectly okay to start small.
Absolutely.
Start with a small piece of property. I've been doing this long enough that I've had folks that, I may be on like the second, third, or fourth piece of property with them.
Right.
Where they bought a piece of property, had it a few years, made improvements to it, whatever they did, sold it, made money on it, bought a bigger piece. And then they just continue to do that. And it's great to see, but I think we all want that big, beautiful farm that's set up, ready, turnkey, ready to go. I'm with you. But it's okay to go buy a 20, 30, 40 acre tract, 15 acre tract, whatever it may be. Because all of the biggest deer I've ever killed came off of a less than 50 acre tract.
Oh, really?
Yep. And it's just a unique property that's in the right place and has the right characteristics. So
I fell into that trap a lot of I used to think I needed at least 200 to 500 acres to set up a property to manage and hold and kill big deer. And like you said, well, if you don't start somewhere, you're never going to get to that level anyway. But you're right. It doesn't, if you got the right acreage in the right spot, or you create habitat that becomes the right acreage, you don't need all that much land. And I think you'll probably find the bigger your farm gets, and granted, some of this is letting it lay alone, but you gravitate towards the same areas in it.
Oh, yeah.
And you're not really, I'm not saying it's great to have a big farm if that's what you can do, but I'll kind of piggyback on your story about killing deer on small tracts. So I'm going to give you the opposite scenario. A good friend of mine, Nick, that I've hunted with for a long time. We've known each other since high school. We were in a giant lease with 6 other guys in Kansas. Some of it was crops. A lot of it was cattle ground. So, how Kansas, kind of southeastern Kansas. So bushy conifers and this and that. Cows were rotated, so they'd clean out one area and all the deer would leave because they want the thicker part. But anyway, we hunted this place and it's just unreal. I mean, the amount of bucks and deer.
Yeah.
But we focused in next to last year we hunted it. We had focused out of 3,500 acres in Kansas. He and I were both hunting the rut, probably 300 yards from each other.
Yeah.
Hunting different bucks, different booners. And we ended up drawing the map. It was basically on a 40-acre section.
Yeah.
That entire place. Now, there were other deer we could chase, but there were like 7 deer over 160 that were using this 40 acres pretty regularly. So if you own that 40 acres, you were literally, you had the opportunity of 7 deer that were almost touching Boone and Crockett, right? A couple were, and a couple were in the 60s. But that just goes to show you, like, we had 3,500 acres now. People the guys in the club kept asking us, why do y'all keep hunting over there? Why do y'all keep hunting over there?
Yeah.
And, there were plenty of big deer to chase otherwise, but that concentration, whatever it was about that 40 acres, a lot of it had to do with the creek bottoms and some timber, and cows hadn't been over there in a long time, so it was real good and thick. But it just goes to show you it doesn't take a lot of land to kill big deer.
No, looking at properties and stuff, because I'm looking at stuff that's probably in that 50 to 100 acre range. The very first thing I do is go to an aerial of it and I zoom out and I do the contour line, the topography. I want to see what the topography is, contour lines, because I want to see what's around that property.
Yeah, how far the first
So it may be that there's a main ridge that comes through and maybe there's a little saddle or something or a pinch point or something that is right there on some sort of feature that I'm like, you know what, that may be something that,
consistently
funnels deer or is a very active area for them. So but it just doesn't have to be a big piece for you to be successful and to go out and just kind of learn those habitat methods, go out there, create bedding. That's one of the things that the whole rabbit hole I'm going down right now on YouTube is, hinge cutting and hack and squirt and creating bedding areas and buck bedding versus doe bedding and all that stuff, and so
it's funny you bring that up. Our NDA put out, you might have seen their article about hinge cutting. They just finished the study. Craig Harper and some of those guys.
I've got it in my email. I got to read it.
So Craig Harper's a huge influence of mine. I've met him several times. He's actually been the instructor at my deer steward course too, I guess it was. And he's obviously got a big Tennessee connection.
Yep.
So I've got to meet him. He managed a big hunting, we'll call it a club, but it was, owned by the state, but they allowed people to hunt. It was a club, just a Ames plantation in West Tennessee. So used to be absolutely world-class type deer hunting. And, but anyway, so I'm a big believer being a scientist, and Craig does everything. He's obviously a biologist. And so he bases everything off, not just observation. He says there's an art and there's a science to it, right? He based a lot of it off actual data collected, not just, it seems like they like this. Like he goes in and says, deer like this plant better than this plant. How do I know that? Because I planted them next to each other in 10 different areas of Tennessee, and they ate a lot more of that than they did this. And that's how I decide that's how he decides what his food plot recommendations are. But anyway, I went into that article, and I was gonna do actually, I brought his book because I bought all his books. I've got there's one right there, that wildlife food plots, and I've got a ton of every book he's ever written. But my point on that was, as that acreage gets bigger too, those projects become a lot more, right? It's a lot easier to transform a percentage of a 40 acre tract and optimize that 40 acres than it is to optimize 140 acres. Yeah. Because, I'm not a big believer in optimizing everything. I like to do about, I can't remember the guy's name, Wildlife Habitat Solutions, but he believes in the 80-20 rule. Improve 20% of your property. And I've kind of like it. If you improve it all, then you don't know where to get in and out without missing deer. But that on a smaller property is a good way to learn that stuff too, and see what works and doesn't work. And then, get into a small property, you have to remember, the smaller the smaller the acreage, the more it is price per acre, right? So buying a 40, let's say you pay $5,000 an acre, and if you're buying 300, that might be done to $3,500 an acre, $3,000 an acre. So what I'm saying from a buyer's perspective is, you're going to get into, say you got $200,000 to get into some land, and you get into whatever that acreage is. Let's just call it a 40 acre tract. Well, when you go to sell it, remember, we're talking about prices rising consistently. So being a smaller track, you're actually going to see a bigger return on investment than you would if you had a bigger track. But my point is, you take that bigger return on investment, you roll it into a little bit bigger property. You roll it into 240s. Like, I used to think one big track was my goal. I need 1,000 acres. I can manage it. Nobody's going to shoot my deer, which, it's not true. Deer's home ranges are so big and variable that you're not going to, unless you're basically not going to hold you can't hold every deer. But I think now I've learned, I think my ideal scenario would be to have 4 or 5 50 to 100 acre tracks that I could pop into here in different times. Maybe they're in different states. I don't know. But just have some smaller tracks, more options. A, I think it reduces pressure a ton. Yeah. Because you can bounce around. And B, it's just, hey, maybe it is in different. Maybe you got Tennessee and Illinois, Arkansas for duck, whatever. Yeah. And just have, instead of a huge track and all my money in one, I think now, what used to be my dream, I think now I'd rather have smaller tracks in more places. Yeah. And more options. Yeah. And I think, going back to what you were talking about a minute ago, that, for somebody that's looking at buying a piece of property for hunting use, don't kind of psych yourself out by thinking, man, if I buy this property, I've got to buy a tractor. I've got to buy, all this farm equipment. I've got to do all this stuff that's expensive, because you don't have to. There's so much value in, and I know Dr. Harper's real big on this, in just creating like natural browse. Absolutely. Using a chainsaw, a drip torch, and a backpack sprayer. You can create so much habitat that holds, and I feel like, those big food plots are great. Deer go out there and eat them. But I feel like at the end of the day, that deer is looking for natural browse more than he is probably anything else. There may be certain times of the year where he or she's really hitting a food plot maybe, but the majority of their lives is back in their natural environment, and creating the places where they feel safe. And they have that natural browse is what's important, I think. And you're right, Craig. And probably because of Craig, I'm the same way. And I've always loved hunting thick areas. Food plots are cool, but I don't like to hunt. I don't sit on them a lot. I don't hunt them a whole lot. Every once in a while, maybe. But if you look at the makeup of a deer, their complete diet, over 80% is natural browse. So I don't care what you got planted in your crop field or in your food plots. 8%'s browse, leafy browse in there, and woody shrub tips. That just is like you said. You create that native habitat where fire is the best. I think fire is the number one way to do it. And we'll go into in future episodes of a growing season fire versus dormant season fire. You produce different types of vegetation off that. One, you're going to produce woody vegetation or trees. The other, you're going to produce forbs. Yeah. But yes, the biggest thing I did to my farm was I let a ton of old field growth and I burned it, let the natural stuff come back. I tried to spray out some of the junk that comes in that I know, but mainly it's for 3 or 4 years. I got to, where there were, trees and stuff, maples, usually a big one that pops up, and I'd go back in and kill them every once in a while. But man, deer love it. And then on the edges, I would feather my edges with stuff like you're talking about hinge cutting, or just falling trees into the field and letting all that grow up. And it changed, because when I bought my farm, it was manicured like a golf course. There was no weeds on it. It was literally I felt like I needed a 7-iron when I walked out there. The guy that cut beautiful green, more cool season grasses, and just no value for deer whatsoever. Sure. And I just planted switchgrass, thickened it up, put in food plots, but I would say the biggest thing I did was transition the timber, not all of the timber. I just picked out 3 or 4 acres here, 3 or 4 acres here. There was already some thick stuff here and here. And then I put in some food plots and thicken up the edges, and just basically all I was trying to do was promote native vegetation. Yeah. And I saw more bucks and more bucks and more bucks seeing the same bucks every year, coming back, watching them get older. And yeah, so food plots are great, but it's kind of like, it's the bonus, right? It's like, if you shore up all the other stuff, say you have a 40-acre timbered tract, you can still feed deer. Yeah. I mean, you're probably going to have acorns, but by opening up 50% canopy is what Craig recommends minimum, but cutting some trees down and knowing, what trees to cut down.
Well, I mean, you just look, there's people that spend a ton of money on, food plots and stuff like that, or even just, whether it be protein or corn in states where you can bait and stuff like that. And they get a bunch of pictures, early, during the summertime with some giant deer. Oh, yeah. And then they never kill anything because those deer are going to go back to what they do naturally. So that's where you really got to hone yourself, know your property, and, to continue to develop as a hunter to be able to, harvest deer like that. But, it's kind of that social media thing that we all run into where, we go and watch these hunting videos and it's a 200-inch deer that just walks out into the middle of a cut cornfield and it gets shot, and it's like, well, that's how they're doing it. That's how it's supposed to be, I guess. Right. That's not necessarily the case. No.
I mean, I could sit here and talk about hunting and property all day, but I guess when it comes to roll first, the only other thing I had on my notes, honestly, was y'all's appraisals, but mainly that was just on certain size acreages.
Yeah. So it's a little bit different when it comes to appraisals as well. Most of your standard appraisers are out there are appraising homes, in subdivisions and stuff like that. So we run across some very unique properties. So probably the biggest point to make there is that we do have appraisers, fully licensed appraisers who, ultimately work for us and appraise a lot of our properties, mainly, larger acreage type stuff, because it's just completely different. On these properties, there's a lot of improvements to take into consideration, whether it be, barns, outbuildings, property improvements, fencing, working facilities, different types of stuff. And we just have appraisers who, for one, have a lot of databases full of trend data and stuff to support appraising improvements and different types of property characteristics. But just in general, have more knowledge of the land market itself and have a lot more information that available to them as far as appraising properties and comping properties and things like that. So,
So I really do think it helps to have somebody who's a little bit more specialized and deals with a lot of farms and has a lot of data to pull from farms, because it really takes time to build a real strong database to get the value of a property. And I'm just speaking, even just doing my own comparative market analysis for when I'm listing a property. I mean, how much is, I just did one. How much is that river frontage worth? I went all the way up and down that river through the whole state, Buffalo River, through 3 or 4 counties. And there wasn't enough data to tell me, well, that river frontage right there is worth X amount extra per acre, right? So there's a little bit of art in there. You can pull trends from properties and you can get a pretty good comprehensive estimation, but to get, I mean, there's an art to that. And I think having people that consistently do land and are know about land, because there's so much factor, timber value, road frontage, soil fertility, like you said, any improvements, water features. I mean, there's a list of things that no two are the same. Like I don't have a 10 by 12 bedroom template. Okay, I know that 120 square foot of bedroom is worth about X per square feet. Land's just so different, and it's so complex that I always feel better when I know an appraiser who's been doing land is the one going out to appraise that property.
I mean, most of the time when I see challenges with appraisals is when we're in an upward trending market. Yes. Because, you may have a sale that every sale is a new high sale. And so obviously, if something's a high sale for an area, you're good chance you're going to run into appraisal issues on it. And I've had that conversation with customers and say, look, you got to remember, when an appraiser is appraising a property, they're looking backwards. Right. They're not looking forward.
Sales history.
So we're not sitting here telling you this property's not worth what you're paying for it. We're just simply telling you there's not been anything that has sold that supports what you're paying for it. So, if it's still important, and once you kind of frame it up that way with somebody, they may have the ability to, maybe pay the difference or be comfortable, maybe renegotiate, meet in the middle somewhere, or something like that.
Not the way to gap that.
Yeah, absolutely. And a lot of customers, we don't run into a lot of low appraisals, appraisals that don't come in. It doesn't happen very often. Now, again, it's not fun when it does. Nobody likes it. It doesn't make anybody happy. It just kind of is what it is. But usually, you can work with the customer, pull the agent in, and just kind of put your heads together. Right. And maybe there is a way to find additional support for more value. But maybe you come to the conclusion that, look, you're paying for a unique property just due to the market itself, prices going up. It just kind of is what it is, So,
and a good thing to remember is, you kind of meant an appraisal is what the data the bank or the underwriter or the lender is taking and looking backwards and saying, based on everything we can tell, we're comfortable saying this property, or the appraiser's doing it for you, but the property's worth X. Now, X is not what your property sells for. A property sells at a market value. What somebody's value, what somebody's willing to pay for it. Mm-hmm. And is market value set off of historical numbers? 100%. But you mentioned that factor. A trending market that's rising, especially one of these faster trending markets, usually that pace or what it's selling at, you're probably right. The appraisal value is chasing the sales price, and that may continue for a long time. So, yes, there's been properties where people get appraisals back and they're a little bit behind, and it's like, if you can gap that because this is worth every penny of that and more. Yep. And next year or 2 years or 5 years, whenever you plan to sell this, I promise you, that little gap we're talking about, you're gonna appreciate it. That's gonna be some of the best money you've ever spent in your life. And so, I think when you talk about appraisals and people getting really worked up, is like I said, it's not a fun conversation, or and it depends on what side of that battle you're on too. Whether you're dealing with the seller, or dealing with the buyer. In my part of it, with your part, I know it's the buyer. When you're the seller, it's really not a fun conversation, because usually it means they may be trying to negotiate backwards, and that's where you've really got to, like you said, figure out. We know it's going to appraise for this. It appraised for it. But where is that trend going to take us? And then at some point, the buyer and seller will either come to a meeting of the minds, and they'll work something out, or they won't, and you go to the next person. But I like the way you put that. Is you're looking at historical data, chasing a future market. But
you also got to remember that when you close on this sale, well, now your sale becomes a comp to further support other properties increasing in value.
You became the newest, most relevant data point for that area. And you're either bringing the value up or bringing it down, depending on how your sale went. And that's just the way it works. Oh, Cody here is a big time turkey hunter. Did you tell me you tagged out in 2 days last year?
Well, it wasn't in 2 days. I actually missed a bird. I killed a bird opening morning, and then missed a bird, and then did tag out. But it wasn't in 2 days.
3 hunts. 3 hunts. We get.
I can't remember exactly.
Pretty quick though. You had a short season.
Yeah. Well, we're fortunately, turkey population around here seems to be doing well. Seeing a lot more. Seeing a lot more birds. I know they've kind of messed or tinkered with the season. Delayed openings and stuff, and we're kind of still waiting to see, how some of that data, or how, what kind of impacts that'll have on the turkey population. Kind of nervous about this bird flu thing, man. If something like that got into the turkey population, it could decimate it.
Yeah.
So hopefully they get that under control.
Absolutely. For people that don't know, in Tennessee, so we did a kind of a trial run on several counties, a segment of the state where we lowered the harvest. I believe we lowered them to 2. Did the whole state go to 2 when they did that?
I believe so.
Maybe the whole state went to 2, but they moved the date back. We usually started, I believe, on was it the last weekend in March or the first weekend in April?
Right around that time.
It was one of those 2 weekends. Yeah. Well, they kicked it back 2 weeks in several counties, one of which Cody hunts in a lot. And do y'all have property in Wayne?
Wayne County. Mm-hmm.
Yeah, so he has property in the county. I had it in Giles, and that was part of the Middle Tennessee group that kind of got kicked back 2 weeks, and I don't really know what they were doing. I think kind of population.
Yeah, I think that was just due to harvest data. There was like 4 counties down there that they kind of identified stood out where there was a decline, and so they took those 4 counties, I guess probably 2 or 3 years ago. Yeah, something like that.
Probably 3.
Yeah, and delayed the seasoning 2 weeks with the thought of, hey, we're going to give the the birds more time to breed, more time to go to nest before we go in there and start hammering them. Yeah. And so, but they made the decision to go do that statewide this past season.
Yeah, they must have found something out of that. But yeah, so now it's statewide. So we don't. I think this year it's like the 13th, maybe, or 12th, something that Saturday,
something like that.
That second Saturday in April. So where was I going with that? Oh, but yeah, we'll be getting ready.
We'll be here before we know it.
We're just a little less juvenile here in a month.
Yeah.
I need to find a juvenile to take. Actually, my young one's not quite old enough.
Yeah.
Are your kids? They
I've got 2 girls. Okay. My youngest one, she's showing some interest, but there's not much room for error in turkey.
Turkey's a tough one to start.
And I told her, I was like, you're going to have to solve your wiggle wart issues before we're going to have much success. I'll take you, but
we might sit in the blind or something.
Yeah, I took her deer hunting. The first time I took her deer hunting, we just went and just kind of walked into the woods 100 yards, sat down, and of course she's kicking trees and shuffling in the leaves, and we stayed there. I told her, I said, whenever you're ready to go, just let me know. We're going to force her to stay there. So 30 minutes later, she's ready to go. So she's still, that was couple of years ago, she still brings it up to this day. She's like, you took me to a bad spot. We didn't even see a deer. And I was like, yeah, I guess so.
But she never really hunted. And so I took her when we were dating, or maybe, I think we were engaged, I guess. We were up on the mountain, as they call it. I don't know if it's a mountain, it's plateau. Yeah. They call it a mountain.
Yeah.
I guess it's a mountain. But it's flat on top. So we went up there, and they have a bunch of family land that's been in their family on one side or the other. They all live on the same, spread out along the same road and stuff. But so we had plenty of land to go turkey hunting. There's a bunch of turkeys up there, and we went. And I think when we went up there, we did not. It was rainy, kind of like the worst time to go on the first turkey hunt. So we didn't get on any birds. It wasn't that fun. Then I took her to a place I had in Decatur County. I think maybe a few weeks later, same season. And I got her right on a bird, and I gave her my shotgun. She had shot it before, but showing her everything. We called this bird in. He's coming right down the barrel. Right down the barrel, got one. And she's got the gun up, and I have a Mossberg, so it's got the gun. Well, I forgot to tell her, make sure you take off the safety. So I watched this. The biggest jerk you've ever seen. And of course, nothing fired. And then she took the safety off. And I swear the gun's still kind of pointed like this, but she's she's looking at the big, I had a red dot, so straightened up maybe. But she missed, and then so he didn't run off. She shot again, he missed. He finally went off. 15 minutes later, we went down the ditch. I called him back over. I'm talking about 5 yards. 5 yards. I gave her the gun. I was like, baby, don't move. We couldn't even sit down. He came running in. And I was like, baby, don't move. Take that gun off my shoulder and move behind me where you can't see. Because I'm looking, I'm like, just shoot over my shoulder, rest on my shoulder if you want to. Bird's right there. The bird finally kicks us some movement. Safety's on. I was like, it's just that bird's day to live. That was that was gonna be the fourth shell fired at her or fired at him. But she had fun. So I think she's been on a couple of deer hunts with me. Well, we took our 2-year-old. We were in a redneck. He watched TV on his phone the whole time and talked really loud. But he had fun. But yeah, she likes to. But I think she's definitely more interested in killing a turkey than a deer. Mm-hmm. So we may try to get her a turkey this year, and then I'm going to try to hunt some, and I'm looking forward to it. Yeah, I mean, I guess I don't know. The year's going by so fast. I'm kind of I'm ready for spring, but I'm not ready for summer. Yeah. I mean, I don't love the hot weather anymore, but yeah, man, it should be I know this year's trending pretty well as far as real estate goes. I'm sure, I would imagine y'all's numbers are probably for people looking.
I mean, it ended, last year ended strong. This year started out strong. So, I mean, people are definitely still buying. Yeah. People still building houses. So it's been great. But yeah, I mean, what I would say is, for anybody who's thinking about buying land or kicking around the idea, give me a call, give somebody with Rural First a call, or we're not in your area, seek out who does land financing in your area, because I don't think it's as hard as you would think it would be. Right. Having a conversation with somebody who can tell you, okay, here's exactly what your terms would be. Here's exactly what kind of rates you'd be looking at. Talk through different payment scenarios and say, if you bought something, in this range, you'd be looking at a payment around this amount. If you can't, if you're to the point where you're serious enough, get pre-qualified, and then go find you a piece of property. Enjoy the search. Enjoy Absolutely. Going out, doing your research. Identifying certain properties. Studying up on what to look for. Watch podcasts, watch YouTube channels, whatever it may be, and just enjoy it, because it will be rewarding. I don't think you'll ever. I've never had anybody call me in 12 years, call me up and say, "Man, oh boy, I really regret buying this piece of property. I really regret taking that loan out." It just hasn't happened. And so, just take that first step and talk to somebody. And I think you'll be surprised that it's not as hard as you would think it would be. Yeah. And it's it's never. I just don't feel like it's ever really the wrong time to do it. So
no, you might not be qualified for land right now, right? But let them identify why you're not qualified, and help you fix that. And then it may take 2 or 3 years, but hey, that's better than taking for the rest of your life and never fix. You never get land because you just keep on that. You don't know what to fix, I guess.
And that happens a lot. I've had multiple folks that I've worked with that, the first time we spoke just wasn't the right time. Right. But we had a conversation about why that was and what some things they could do to better position themselves. And then sure enough, sometimes it's a year down the road, sometimes maybe it's 2 or 3. Right. They literally call me and are like, "Hey, we did, here's what we've done. And we've actually found this piece of property that we like. We're ready to go." Yeah. And, we do a loan for them to get their property bought and move on, or get that house built or whatever it may be. So yeah, you're better off knowing now, versus waiting until you're really ready to do it, to find out that you can't, right, for whatever reason. So yeah, again, that, just that, I can't tell you how important that pre-qualification is for us. Just letting us take a look at it doesn't hurt anything. See where you're at. And just go from there.
Yeah. And it's definitely, from the lending aspect and the borrower aspect, important, but also when you go to some properties, it's required to submit with an offer. Other times it just strengthens your offer, because you at least have that paperwork in the offer showing, hey, whether it's Rural First or whomever, pre-qualified to cover the purchase price of this property. So it can definitely strengthen your offer. We'll probably wrap this up, but what is the best way and I'll put everything in the show notes so people can click on it, but what's the best way to get a hold of you, either directly or through Rural First, however you want to go about that?
Yeah. I operate off of my cell phone. So my cell phone number is 615-512-1551. And like I said, just give me a call. And what I love doing, and I spend a lot of time doing, is just talking, just educating people, just talking through scenarios, setting people up either to immediately help them or to be able to help them down the road. So, but yeah, we can put, my email, contact information, everything in the comments section down below the video. But yeah,
and then,
call me anytime.
Guys, people from other states, Rule First.
Mm-hmm.
It's a 1st.com.
Yep. So Rural First. So RURAL, the number 1st.com. You can go to that website, and there should be a coverage map. Map shows where all. I mean, we're in Hawaii. Florida. Yeah. It's a little bit scattered, but it's slowly starting to kind of fill itself in. It's been great. I mean, it's been real valuable across the country.
Yeah, I looked at that map. I think it was 2 nights ago, and I was like, man, they cover a lot. Yeah, there's a big chunk right here in the South Central Midwest, I guess, and then there's a lot west too.
Yeah, that's really where most of our expansion has been, is out west.
Yeah. Well, I've personally used these guys. I've met with a lot of them, been to a lot of meetings that they've talked at, and I'm a big fan of them. I'm not sponsored by them, or I don't get paid by them. I just I like to share. I share on here what I actually use. Period. So that's why last week we talked with land.com, because I honestly, they've been a big part of my business, and I honestly just love their tool, and they've helped me out. Rule First, I've never personally used them. My wife and I have loved them, but I've never had a client I've sent over there that's had an issue with the loan that they didn't. If they did, everything got worked out. We've never not closed, and like Cody said, they just do a great job of keeping that buyer even more educated than I'm able to on the financing side, the loan side of it. And so hopefully I can do my job on the property side and kind of the whole gamut, but it's nice to have like a sub-specialist basically in the land type industry, land lending industry that I have complete faith in. So I appreciate you helping my business over the years, and I'm sure we'll continue to work together in the future if I can
absolutely
get some more buyers in here to get loans. Right now, there's a lot of cash floating around up there. In my
I mean, it's been that way for years. There's always been a lot of cash in this market. A lot of people moving to Middle Tennessee, they've sold something elsewhere, coming here, have the cash to spend. More power to them. I don't blame them. I do the same thing.
If you can do it. Yeah. You got the means to do that.
That's right.
No worries. And I just, but yeah, so we'll wrap up today. We appreciate y'all listening or watching. I'll have links to other episodes and stuff in the show notes. And if you got anything out of this, feel free to like and subscribe. Maybe give us a comment, and we'll talk to you on the next one.